Good afternoon. Thanks for joining me on 𝐿𝐴𝐼𝐴 TV. James Preston with you, and this is the Market Movers program, a show where we track the key movements from the ASX in addition to other movements globally. The ASX200 is extending the gains from yesterday's turbocharged session, albeit with inflation concerns capping the overall gains. Although Fed officials have maintained their view of recent price increases as transitory, the market is looking for signs of when the Fed might potentially begin to pull back its pandemic support. On that note, let us zoom our lens on the market performance today and the drivers under the spotlight. Australian stocks inched higher on Wednesday, helped by gains in energy, healthcare and also in the banking sectors. Crossing the 7,400 level by midday, the ASX200 was able to set a new 100-day high before sliding just a little bit. Having said that, investors refrained from making big bets ahead of the outcome of the US Federal Reserve meeting, which is scheduled for later today. In the US, where consumer prices accelerated at their fastest pace in the last 13 years during May, investors are showing concern surrounding the early tapering of bond purchase programs by the Federal Reserves. All eyes are now glued to the upcoming Federal Open Market Committee statement, which is scheduled for later today, and it's expected to turn it into a test of the central bank's inflation narrative. Having said that, the Federal Reserve may not change its monetary policy stance in today's meeting, even in the face of rising inflation, given the lacklustre progress in jobs growth across the country. Changing focus slightly to the sectoral charter, and the energy sector is the leading gainer on the board for today. Australian energy players such as Woodside Petroleum, Oil Search, Beach Resources and Origin Energy are all trading in green, with crude oil reaching multi-year highs. In a continued uptrend, crude oil prices hit their highest level since 2019 during trading on Tuesday, and this was due to the expected surge in demand that should accompany increased travel as pandemic restrictions begin to ease around the globe. Meanwhile, heavyweight mining stocks fell on weaker gold and copper prices. Prominent miners such as BHP, Rio Tinto and Fortescue Metals, trading as FMG, are all trading in the red today. FMG has incurred the loss despite the government of the Democratic Republic of Congo shortlisting FMG to develop the Grand Inga hydroelectric power plant. Also in the yellow metal space, Australian gold miners such as De Grey Mining, Evolution Mining, Newcrest Mining, Ramulus and also Northern Star Resources are inching lower today. On Tuesday, gold prices eased as the dollar firmed and as investors are weighing on the possibility that the US Fed this week may signal an eventual easing of stimulus. Additionally, copper miner Oz Minerals slid a little lower amid copper price downticks. On Tuesday, copper prices fell to a 7-week low as commodity traders and funds trimmed their bets on higher prices due to growing nervousness that China would soon move to curb further price rises. An Aussie investment firm is in the news, this time for the right reasons, and I've got all the details after a very short break right here on 𝐿𝐴𝐼𝐴 TV.
New Zealand is unique, and 𝐿𝐴𝐼𝐴 TV is here to bring you all the latest news and trending market updates. Streaming across multiple platforms, so no matter where you are, whether it be at the beach or on the farm, you can count on the team here at 𝐿𝐴𝐼𝐴 TV to be your home for accessing the latest valuable insights into global issues that are affecting New Zealanders. Subscribe to our channels across YouTube, Facebook, also visit 𝐿𝐴𝐼𝐴.co.nz.
Thanks for sticking with us on 𝐿𝐴𝐼𝐴 TV. If you're just joining us, this is the Market Movers program. James Preston with you, and let's now put the focus squarely on an Aussie investment firm who are enjoying some positive news today. Regal Investments shares have hit a record high following the announcement of a no-action letter from ASIC. The investment firm stated that regulatory body ASIC will not be taking any enforcement action against the company under an investigation related to trading. Then, regenerative medicine company Avita Medical skyrocketed on upgrading its fourth quarter revenue estimate. Notably, the return of people to normal activities in the post-COVID era has interestingly sparked an increase in burn incidents requiring treatment with AVITA's RECELL system, which is paving the way for higher commercial revenue. Besides, the US FDA's recent approval for the company's RECELL system in treating full-thickness burns of all sizes in children seems to have strengthened AVITA's growth prospects for the months ahead. Meanwhile, grooming retailer Shaver Shop edged lower on releasing financial outlook for fiscal year 2021, although customer service metrics remained quite strong. Shaver Shop expects to deliver between $211 million to $213 million in sales, along with net profit after tax of $16.5 million to $17.5 million. Overall, Shaver Shop seems to stand in a favourable stage to utilise this DIY trend, with COVID-19 accelerating DIY adoption of personal care appliances. From face trimming to the tech space, and Aerometrics traded at an over 1 month low on the back of a tepid earnings forecast. Overall, the company has continued to see increased interest and usage of its MetroMap subscription service across the SME market over the past few months. Furthermore, opportunities are gleaming for the company's 3D modelling product offering in growth markets of gaming, virtual worlds in virtual reality, and augmented reality, in addition to property development. Moving on, and let us now take a glimpse at the crypto space. Bitcoin traded in a range on Tuesday, currently down by 1.1% to US $40,086. Ethereum and Dogecoin were also down by 1.8% and 2.2% respectively. Bitcoin bounced back again from the lower levels in the cryptocurrency market after Tesla CEO Elon Musk tweeted that the electric car maker could reopen the door to Bitcoin transactions into the future. Bitcoin climbed above $40,000 US on Monday after yet another weekend of price swings following tweets from Tesla boss Elon Musk, who fended off criticism over his market influence and said Tesla sold Bitcoin but may well resume transactions using it when mining is done with cleaner energy. Meanwhile, the first Bitcoin upgrade in 4 years has just been approved by Bitcoin miners, and it's called Taproot. Although it won't take effect until November, it has supported the world's most valuable cryptocurrency to breach the $40,000 mark for the first time in 2 weeks. The long-awaited upgrade will change the current privacy signature, elliptical curve digital signature algorithm used for protecting the ownership and privacy of Bitcoin owners. Now, there are growing concerns around investor complacency, and we'll take a look at that to wrap up the Market Movers show on the other side of this break on 𝐊𝐶𝐤 TV.
Property by 𝐊𝐶𝐤. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐶𝐤 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐶𝐤.
Welcome back to 𝐊𝐶𝐤 TV on this beautiful winter day in Sydney. Hope you're enjoying the program. This is the Market Movers show if you're just tuning in. And just before we wrap up the program, it's important to note that in Australia, share market volatility appears to be returning to pre-COVID-19 levels, with the benchmark index posting strong gains in recent days. Investor complacency still is an issue that we need to be cautious of. The ASX 200 marked its highest close ever on Tuesday, after minutes from the central bank's June meeting hinted at a continuation of its accommodative stance. Today's turbocharged session, backed by the energy sector's huge performance, is also indicating reduced volatility to some extent. With volatility levels dipping to new lows, investor complacency seems to be regaining strength in the equity market, with high confidence levels faring among investors. Investors appear to have become optimistic over strong economic recovery from the COVID-19 crisis, as reflected by the recent performance of some economic indicators and corporate earnings. While a low volatility index is usually promising for the equity market, investors should still exercise caution in this volatile space. It's worth understanding that the underlying conditions driving low volatility may well change over time, potentially triggering huge losses. As a result, investors should aim to build an investment portfolio on a balanced allocation plan, comprising assets that can manage potential volatility spikes. So hopefully that's just a little bit of information that could put you in good stead for the months ahead. But that is all for now. Please stay tuned to 𝐾𝐿KIND TV for more updates across the economy, markets and sectors, and of course, the news beyond markets in around 15 minutes time with Holly Shields.